All right, Jamie, if I told you that a company that built its empire on merino wool sneakers is now selling GPUs to AI startups, would you believe me?
Cindy, in 2026, I believe you told me that Crocs was launching a hedge fund. But yes, today we are talking Allbirds, the shoe company that woke up one morning and said, well, you know what? Would a nice pair of shoes look really good with, I don't know, a data center? Ugh,
Well, okay. So the press release called it a pivot.
this is
What
not a pivot.
is absolutely not a pivot. A pivot implies, that you keep a foot on the ground and I don't know, pivot. And it seems to me like they literally just sold the foot.
Sold the foot, sold the other foot, sold the shoes the feet were wearing for $39 million, by the way, and then refilled it with an empty body of GPUs.
Well, they say a bird in the hand is worth two in the cloud, I think, apparently.
Okay. Yeah, we're about 45 seconds in and we've already started using the bird puns, right? So I have a whole spreadsheet of those.
All right. So today's question is when a publicly traded company sells everything it does for a living and then refills the ticker with something completely different, who exactly is that decision made for? And why in the world are we calling it a pivot? All right. So if we
Ooh,
just sort of look at the overall situation, I didn't even know that Allbirds existed until this whole thing happened. It's a millennial startup. It's Silicon Valley darling, and it's Time's world's most comfortable shoe. I've never heard of this either. So,
yeah, yeah.
so
I've heard of
it,
Allbirds at least, and I am not a fashionista, as we can tell right now.
well, yeah, me neither. So it was originally valued, well, not originally, but at its IPO, its highest valuation was about $4 billion. And they just sold for 39 million, you said?
$39 million. That is the entire shoe brand, all the IP, and they sold to the American Exchange Group, which is the same people who own Aerosol. So they
Okay.
sold to another shoe
Shoe
company.
company.
Shocker.
Yeah. Yeah. So if you just look a little bit at what's been going on in the recent history of the company, they named a new CEO in March of 2024. They had the CEO was the co-founder, Joey Zwillinger. Somebody will help me with that one. And so he was replaced by the CEO, Joe Vernaccio. And apparently he's been at North Face and Patagonia and Nike, all somehow they're all related to apparel and or shoes, just sort of calling that out there. And then January of 2026 they announced that they were closing nearly half of their US full price stores. They must have some outlets out there as well. And then in February of this year they announced that they were going to do a high fashion pivot, and that lasted a month. And then in March they decided they're just selling it all.
Yeah.
So yeah, 4 billion to 39
99,
million.
99% wipeout of enterprise value, right? So this guy has done a really good job in the 2 years he's been turning it around, right? But yeah, so March 30th, they announced dissolution and asset distribution to the shareholders. They are literally going to liquidate. That's what was going to happen.
Yeah. And then what happened?
16 days later, on April 15th, they announced a $50 million convertible debt issue and that they are pivoting to become an AI GPU renter. Basically, they're going to do a GPU as a service play and change their name from Allbirds, because they're selling that IP, to Newbird AI.
It sounds to me like their plan is to fill a data center where full of servers, infrastructure as a service. It's not a new thing. It's been done a lot. So
It has, but
that's
it is the AI moment, right? And so
right.
they did it. What happens? The stock surges 700% in a single day, right? And it is crazy. I mean, for context, the company's revenue had declined 22% to $160 million in the last 12 months. The market cap was about 22 million in March. They sold for 39 million, and 16 days later, the math looks incredibly different.
Yeah. So, and you said it earlier, some kind of turnaround, right? And that's the question I have is this a brilliant rescue? Is it Is it ethical? Because the CEO clearly was driving the company into the ground, or, maybe it was already, maybe it had momentum. Let's give him some credit.
Yeah,
It already
he
had some
was
momentum.
trying
So,
to turn it around. He was, on a ship that was heading into the iceberg.
yes. And so the question is this ethical to take a publicly traded company that was designed around shoes and turn it to a data center, an AI data center company? When I don't know, at least I don't have a lot of confidence in his track record at this point because I haven't seen any of the other stuff. I've only seen his last 2 years at Allbirds, but I think that's ultimately the question that we've been wrestling with. I know I was curious about, are companies allowed to do this, or managers allowed to do this? Because when I invest in a company, I just assume that they're not going to go into an entirely different business. And so there is some theory out there that says that managers, so those are the C suite, everybody that works for the company, those managers are agents that act on the behalf of shareholders, and they're the principals.
Okay, yeah. So it is interesting. I mean, Michael Jensen's agency theory says you need to incentivize your managers to do what is
Mhm.
best for you. That is really all of what agency theory is suggesting. It really does seem like it centers around how shareholders should incentivize the managers. This is very different, right? This is the managers basically taking and holding hostage the funds of the company to do what they want to do, right? And so
Yes.
they had a couple of options. The first one, liquidate, return the money to cash. The $39 million that came in, whatever cash we still have left over the door, let's shut down the business, pay all of our vendors, lay off our employees, give them some money as on the way out, and then liquidate and give everything back to the shareholders. That is probably the most straightforward and ethical thing these individuals could do right now, because that would allow the shareholders, right, to then use their money the way they choose to, since they could no longer do the item that they had originally bought into, which is shoes from wool. They have a second option: continue to run the business and run it into the ground, drain all of the assets away over time, but then provide everybody with employment for an extra year or two or whatever it is, and go ahead and do that. That's
I
option
prefer
number
door
two.
number one so far. Yeah,
Yep,
I like door number
not
one.
very popular, right? Or the third one would be to actually pivot, try to find a way to maneuver these shoes into something different, into something that is going to be more profitable. I don't know whether it's moving to socks or, using the same wool to create some sort of the most fabulous coat. I don't know what it is, but typically a pivot means you have some sort of at least tangential relation to the original idea, right?
Well, couldn't it even be like if they had their own stores, retail stores? Again, I didn't even know that was a thing. I've never seen one. But why couldn't they just change their go-to-market strategy and still
Also a
sell shoes?
possibility. Again, pivot, right? And so unfortunately, the CEO chose door number four, which, by the way, was not on the original menu. Sell the operating business and become a completely different type of business, an AI business.
And I'm still trying to wrap my head around that. If we are looking at the scenario based on how we assume that the CEO is looking at the scenario, they're trying to make the decision that works for the most individuals, is shareholders in particular, right? If you're a publicly traded company, your number one is to the shareholders. So what makes the most sense, and on what timeline? And so it seems to me that the best option for everyone is liquidation. But
Is it though?
like,
Because that's like it's an ethically gray area. Because here's the thing: what they ended up doing made the share price surge 700%. So if I am a person who is owning Allbirds, right, it's worth $2.50, maybe $3 in liquidation, and all of a
mhm,
sudden the CEO makes one announcement, and I can turn around and sell it for $18, $20. Even now, I'm still getting to sell it at about $8. I am
yeah.
much better off because of their wild, crazy idea than I was beforehand. So that's where it becomes like this very odd situation, because it's not like they then made an announcement that says, okay, we're going to burn the money, although I actually think that's what they're going to do. Um, they're going to burn the money and it's not going to be worth anything, right? That's
So
not what happens. Let's talk about what they actually are doing. Okay. And the timeline, because it gets really messy and really annoying really fast. Okay. Because as an individual shareholder, as somebody who is not in the market on a professional basis anymore. This is what is so crappy about being the independent shareholder. You had no influence on this at all, but you are
Right.
still having to live with the consequences. In this case, good consequences right now, more money, but could have equally been bad consequences. March 30th, they announced liquidation. Basically, they're saying we're going to sell this. We're going to have a special shareholders meeting. They even announced that they're going to have that because we're going to dissolve the company and sell our assets and liquidate. And we get about 2 years to do that. Then, somewhere in that week, it turns out that the management had this idea of being an AI person in the back of their brain because we will find this out on the 15th, but by April 8th, 9 days later, they had 71% of the voting shares agreeing to go along with what management is going to propose. So they
How
lined up their horses for this on April 8th. On
how
the
long would that take? So, like, they've known this for months? Or
They
I
might
mean,
have
I
known
have no
this
idea.
for months. They might
Okay,
have. I mean, I
okay,
can't imagine that it's brand new. I mean, this might have been an idea that they've now really accelerated, but it's been in the works for a while, I'm sure.
okay. Yeah.
Then on the 15th, they make their announcement of what this pivot is going to be. They say, hey, here is going to be, we're going to have our shareholder meeting on the May 18th, but we already have 71% of the vote to be able to do what we are going to do. And here's what we're going to do. Number one, we would like you to approve the sale of Allbirds to the new shoe company with all of its IP. Everything's going to get out. We're going to get $39 million. Number two, we're going to issue $50 million convertible debt, which requires your approval because it's going to be more than 20% of shares outstanding, blah, 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 some law stuff. We need you to approve that because we're going to use the 39 million and the 50 million and our cash on hand, which is about in total about $100 million to become bum, 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 all New Bird
New birds.
AI, right? So
Yeah.
there's the big announcement. Now, New Bird AI is going to be a GPU service company, which means we are going to be destroying the environment rather than trying to help it with our all natural, super comfortable sheep based wool, for the public good one. Since we are going from eco friendly to eco destroying, we also need to change our charter because we have this whole public good part in our Delaware charter. So please ignore the fact that we are now greedy bastards and we are going to instead need you to approve this chart. Number four, by the way, just in case this whole $100 million in AI thing, which by the way is a drop of a bucket, like that's no money at all, as we've talked about in our prior
No money.
meetings. We would like the permission that at any time we decide that this is not a good idea after all, that we can go ahead and do what we said on March 30th and go ahead and liquidate. Okay, anytime over the
Yes.
next 2 years, that would be fine for us. Okay. And by the way, I already have 71% of the vote. So the fact that the change in charter requires a supermajority, I've already got that in my back pocket, right? It's all there. They already had it lined up. Everything is already going to pass. Now, this is where it gets really obnoxiously interesting. That vote is going to happen on May 18th. Okay. The
Mhm.
people who get to vote on this, who found out about the vote on April 15th, the people who get to vote on it are the people who owned the stock on April 13th, 2 days before the proxy gets released. So those 71% of people who signed the agreement on April 8th, they haven't sold between April 13th, right? They get to do the vote. But then on April 15th, when the stock surges to as high as $20 a share from like the 700% growth, right? Whatever, they're almost three. I have no idea whether they sold or not at that point. They can still vote if they sold. They are now
Mhm.
trading on public information because it is now publicly traded information on the 15th. And I'm guessing at least a few hedge funds thought, oh my gosh, let me go ahead and cash in.
Yeah. Well, somebody had to sell those shares. I mean, The shares, I mean, they just don't come from nowhere. So
Well,
somebody had to
I'm
sell
sure
them.
there was
So
plenty of churning throughout the day. There was a lot of algorithms and stuff like that. So when you see this really large surge, there are lots of algorithms out there that are looking for this type of thing in the market. So it does make the
yeah.
numbers and volumes go and explode. And they're probably buying at say 12 and selling again at 14, buying again at 14.50 and selling again at 15. And so the same algorithmic
Oh,
trading is
okay.
going in and
Interesting.
out of the stock multiple times, and they're trading back and forth with each other, which is why we see this really big blow up in the trading
Right.
volume, even if it's actually the same shares getting churned hundreds
Interesting.
of times. Okay. It doesn't
Interesting.
necessarily mean, hey, insider who owns 7% is selling into this big item. They probably have a blackout period. So there is some ethics still going on here. Doesn't necessarily, but it does not necessarily preclude, hedge fund B going ahead
Right.
and selling. And we've got a couple of interesting issues here that's going on. Number one, it's not insider trading. It's public information by the time April 15th comes on. The only thing they didn't have to do was not sell. Okay. And
Right.
insider trading means that you took an action. The I chose not to take an action I might have taken otherwise is not something that the SEC could possibly prosecute, right? So it's not
Yeah.
illegal. Number three, it's not illegal to owe or be in possession of insider information. So the fact that they had that insider information between say April 8th or their original meeting with the management and April 15th when it became public, that's not illegal. It's not illegal to do it, and it's not illegal to trade once it becomes public. Is
Right.
it ethically wrong? Probably. Is it legal? No. Right. And so we've got
Mm.
that issue. What it is illegal to do is pump and dump. Right. So,
Which, yeah.
but pump and dump has a very specific terminology and it doesn't get prosecuted very often. Pump and dump is actually to spread kind of false rumors or to do something to manipulate the stock on purpose that does not have any actual validity. AI, Newbird's AI is a thing. It's going to happen. So
It is it going to happen? So at the same time, they're asking for the ability to liquidate this company whenever, and you get to May 18th. What if they decide on May 19th to liquidate? It- Well,
and they can do that. They're even arguing. I mean, what their argument is there is going to be some sort of small payout. I don't know what it is. They keep saying we're going to do a special dividend. That suggests there is going to be a payout. I don't know how
mm,
much it's going to be. And that people are going to continue to stay at listed. So you're going to get both a special dividend and continue to hold the stock. So
mm,
they're trying to basically say there's a win-win here. You're not going to be out because we've decided to make this pivot. Right. But why did they make the pivot in the first place? Why did they choose not to do it what I'm going to call the old fashioned way? And this is where we get back into agency theory issues,
right.
which is liquidate the company, give the shareholders back their money. And then if you want to go out and start an AI business, fine, go start an AI business. Go ahead, Joe, with your lovely background in clothing and see if you can get somebody with Silicon Valley to give you multiple millions of dollars to start your brand new AI business. That's the
Right.
agency issue. That's the problem. Joe couldn't do that. It would be multiply expensive. He probably doesn't have the credentials in order to do it, but he had this pot of gold sitting in his company. He had a dream and he chose to use our money, the shareholders, to follow his dream.
Or yes, I agree. Or to cash out at a higher sale price. Well, I'm not entirely sure. So, but I think we see other companies doing something similar, and I do wonder if this is going to be a new type of illegal activity longer term. It doesn't make any sense to me that if as a shareholder, if I own shares in Allbirds, and I'm probably doing some index somewhere, but if I did, I would not. I have absolutely no interest in this pivot. This is not a pivot. Damn it! It's not. I keep calling it. It's not a pivot.
It's not a pivot.
I would have no interest because this guy doesn't has no clue what he's doing. He has no idea, and you can tell just by the $50 million acquisition. Like literally, if they're going to pay out to people, if they're going to do a special payout, maybe they'll have $50 million left after they do their special payout. No, it makes no sense to me at all. So the reason is not altruistic. It can't be. Let's take employees, for example. Always say, well, we want to give our employees longer time to find a new job or to keep their jobs. The wool farmers are they gonna sell chips? I don't understand.
No, it
I
doesn't work. It doesn't work.
work. Yeah, it makes no sense to me. I do think we're seeing more of these, just people that are taking advantage of this hype cycle. But I just feel like this can't be the ethically strong move. And I don't understand why more people are calling it out.
I
Like,
really wish I knew. I really do. I mean, the core ethical move here is linguistic, right? Calling something a pivot signals some sort of continuation, right? We
right.
go to Eric Reese.
Reese.
Harvey Rice pivot as in the lean startup, and he defined it as a course correction that preserves what you've built and learned. I have no idea what you could have learned in running a retail shoe store that is going to help you sell GPUs as a service.
And I think the takeaway for our managers in this one is before you do something major, did everybody sign up for this? Did our shareholders sign up for this? Did we earn the right to change the game? And it does not sound to me like they have earned the right to do anything, especially after their maybe actual pivot to high fashion. They only stuck with for 1 month. So
Yeah,
the whole thing is just shenanigans. It's my new favorite word,
absolutely
shenanigans.
agree.
So there was one other thing that I found fascinating, and it's that the CEO actually did sell some shares in early March before
Yeah,
the dissolution announcement, and I know it caused me to ask way more questions. You helped me with this one. So he claimed that he was selling shares to cover his taxes for RSU vesting. Yeah, when RSUs vest, you have to pay taxes on the vested
yeah.
income. And I thought, well, wouldn't you just not do that? Like, why wouldn't you just pay the taxes out of your pocket? And so you did some research on that one. What did you find?
Well,
Because
a
it really
couple of
is,
things.
yeah.
Yeah, like to be honest, it's one of those insider trading things, right? Which is that if he had
Mhm.
chosen to go out and pay in cash where he normally sold, that would actually be a bigger ethical dilemma than what is showing up. Anytime you do insider trading when there's a big pivot, right? This is going to cause people to look at your insider trading and ask back questions. Now, he sold before the pivot, which means that he was selling at about $2.40 or something like that when the stock wound up surging up there. So it sounds like a really stupid move. But the thing about it is, like every single quarter for the past couple of years, as he has been the CEO, every time his tax bill is due, he sold shares in order to cover the taxes. So
Yeah.
he has continued that process rather than turning around and instead going to a bank, getting the
Right.
cash to do that, and then being like, oh, look, I had no idea, right? Now I guess I'll sell them now. That doesn't work, right? So he
Right.
actually did the ethical thing here, which is probably, in his gut, like, oh my gosh, it's going to cost me a lot of money because had he waited a month, it would have been worth a lot more.
Right.
But it
And,
does
and
bring optical issues, right?
And clearly, he didn't do anything wrong in selling his stock, right? It was a
Right.
pattern that he was following, and he clearly also lost out in the end, on those shares that he sold to cover his taxes. But I do think that it, I don't know, it was the thing that called attention to this whole thing, and actually diving deep into it for me, and that it just feels off. And I think it's that nothing feels like it's aligned to any sort of values. There has to be information asymmetry, which is a problem for publicly traded companies. And so I think the words matter. I think this one will get researched a bit more. I could be wrong. I don't know. What do you think?
No, I agree with you. There was no insider trading that we know of.
Yeah.
And but the problem is that it's like the corporate governance version of I haven't been caught yet. It's not ethically sound what they're doing. It's not
Right.
the trading of the stocks. It's not trying to make sure that your board of directors is behind your management. All of those are routine things. It's the idea that you're going from selling shoes to doing AI without the shareholders' permission because you're not really asking your shareholders, are you okay with this? You never
Right.
did. You decided to do this, lined up all the things, and then presented it as a done deal. And that's the ethically bad part of this. And me as a shareholder, I had no choice. Now I can vote
Right.
with my money, right? Which is now I can go ahead and sell my stock and thank you for the extra money. But
Right.
it's still just the fact that this particular example means that I made more money does not make it right. Because for
Right.
every example that this one happens, there's probably an example of going the other direction, right?
Right. Or the retail buyer that doesn't know that they don't have a chance. That they're buying at the high price when everybody knows it's just gonna tank. It has to because this can't succeed. So, all right, Jamie, what's your final verdict? Was this an ethical pivot or was this like a financial Hail Mary like as a press release?
Yeah. I honestly think it's both. And honestly, that's the uncomfortable truth that managers need to sit with. The right financial move and the right ethical move are often not the same move. And pretending that otherwise is how you end up in a Harvard business case study.
Yeah. Yeah. Well, and I just keep coming back to the leadership isn't just about the decisions that you make, but it's about who you tell, what you tell them, the transparency all around you, and whether or not you can actually look people in the eye after you tell them. And that is where I think we've got a lot of gray area. So I think Allbirds may have saved the company. I don't know, they sold it, but I don't know if
Mm,
they saved any trust with the public. I think that's a different spreadsheet.
yeah. If you're a manager listening to us, three things. Number one, know your agency conflicts. Be honest about who pays for the cost of your pivot. And for the love of governance, mind your trading windows.
So, thank you for joining us on Seriously, What Could They Be Thinking? If today's episode made you laugh or think or quietly check your company's 10Ks, please subscribe, rate us, and send us the next corporate plot twist that makes you go, wait, what?
And until then, keep your spreadsheets handy and your coffee strong.